There are reasons to be enthused about the crypto market in the coming days. But hear me out. It's not smooth sailing from here on out. Buying Bitcoin right now is like catching a falling knife. People making purchases for Bitcoin are simply cutting their hands open and instead losing money. But I continue to believe that there will be some kind of capitulation and macro low forming. Although there is no confirmation at this time, the signals are continuing to appear, which is what we'll be discussing in today's video. But first, a brief request from us. Do like the video and share it with your friends so that they can benefit from it as well. Also, don't forget to subscribe and push that bell notification icon so that you're updated for any future videos. Back to the video. Let's discuss short-term trading because short traders are still earning the most money. However, the tides must ultimately change, and perhaps we're seeing some of those early signals right now. Gann's 7 to 10 bar rule is one pattern we should be familiar with. What this suggests is that after 7 bars or more in a row, we should expect a high possibility of a turning point. Nothing works all the time, but the past 3 that have actually happened have produced a turning point in the market. Much like what happened in February 2021. When there were 7 bars consecutive, there was then a subsequent rise that followed this. Since the market reversed from that position, we're no longer waiting for the absolute end of that final move. But this can happen occasionally. That's what we'll be taking a look at right now, but we'll move on to the next circumstance we observed in March. There were 7 consecutive up bars once more. Then the most recent one, which I also mentioned, was 7 bars or more into the dip on May 12. There are, however, 2 things that we must keep in mind: confirmation and momentum. What we should have seen out of that low was a bit more momentum, which we didn't get. This is exactly why the market has broken down even lower. So if you review the crypto market scene, you will notice that we have circumstances when we have 7 or more bars in a single swing. What I'm looking for is the possibility of another bounce from the 7+ bar move. This shows that I'm strategically going into the market by looking for confirmation, but currently there isn't any yet. I don't want to be one of those people trying to catch the metaphorical falling knife, because this knife is still falling. Anyone trying to buy crypto right now is simply cutting their hands open. So I'll still be looking for some confirmation before I make a big market move. Zooming into the intraday time frame, short traders are still winning the game. Momentum has slowed a little to the downside of the market, but we still need to see some upside breakouts before the bulls can start to gain the upper hand on some short-term time frames. Another simple pattern that I've noticed is virtually every time there is a huge spike in volume, it can frequently signal a market low. To demonstrate what I mean, we've got some really high volume flowing into the market right now, and the decrease has slowed down at least a little bit, and it now leads for the time being. However, we've witnessed an extraordinary amount of volume around the bottom. If you check the charts, the market stopped declining after May 12, but I'm not predicting that this will be the massive macro final lows that they frequently are. All I'm hoping for is that the drop will come to an end and for some type of bounce to be seen. The massive waterfall began to diminish on May 12. The sell-off topped, the market paused, tried to go up, but there was not enough buying momentum. A similar pattern can be seen all the way back to December 4 last year. This was the last time we saw those big volume spikes on downward moves. They can mark a pretty significant low point in the market. We are in a bear market right now, which is telling in and of itself, because the market tried to go up every time we received these enormous volume surges, but there was no upside momentum, and the larger trend was basically downwards. All trends eventually come to an end though. To emphasize this point even more, when volume picks up all these low turning points, it can mark some extremely major lows such as those of May and June 2021. You can see how we just had those enormous spikes down, which was basically the market's final low, but this can take weeks or months for the market to bounce yet again. If we do get some confirmation, my best case scenario for what's going on right now is that we're seeing a bit of a water cascade sell-off with a significant spike in volume. Once the market settles, I'm hoping that it would bounce to rise yet again. I've zoomed into the 4-hour time frame and I've included the trend by our TIA indicator. The background of this chart tells us if the trend is in an up transition or down. This is valuable to know since the trend turned down around 30,000 on our short-term time frames all the way back on the 10th of June and it remained there ever since. What I'm waiting for right now is that the short-term trends would reverse, and this will give us some confidence in our earlier analysis. What I'm talking about is extremely high risk because the market is still down so far. Shorting is clearly crushing the market, which is something to be cautious of. But you know what they say, no risk, no reward. And in this case, a high risk equates to a large gain. That's what I'm talking about here with these broad picture setups potentially playing out. We just don't have any confirmation yet, so I'll be watching what happens with these short-term trends before diving into the market. I really want to emphasize that low patterns might take a long time to develop and confirm. By that, I mean the market can make a turning point of some sort, but it can take many weeks or months for the market to actually move far away from that low point. In the meantime, it can also drift a little lower. But from the last intermediate low on the 12th of May, the market just hung around. What this means is that it was sending us indications that it wasn't ready to rise again, which is probably why the market continued to drop or dump from that point rather than rise. Going back to some of the past examples of the market putting in some kind of surrender and low, you can see that it doesn't always rally right away as seen in September 2021. Shorts were increasingly active as the market stayed around those lows. And it was the shorts that were eventually crushed in the market as the price broke away just as we saw in May, June, and July of that year. Although this may not be the absolute final low as long as the price remains over about the $20,000 price point, there's a chance that we'll see some grinding and potential short-term accumulation before we see another bounce. I believe I've expressed enough hope for this specific downturn, but keep in mind that there's no proof just yet. It's a dangerous scenario to be trying to catch a theoretical low, so I'm always on the lookout for such short-term trends that haven't yet turned around. Unfortunately, Ethereum is not listed among the altcoins that are in a significantly better situation than Bitcoin. The next macro level of support is around that $1,000 price point. It really is a bit below, but what you can see here is that it's trying to bounce away from the previous support at around $1,300 to $1,400. For Ethereum to get strong once again, it needs to at least have a weekly close back up above those old tops, at least in the short term. To be a little more precise, those old tops come in at around $1,200 to $1,300. It does show that it's trying to go into a bit of a bounce, but it's not quite there just yet. From what I've learned, you have to be careful with these markets, especially when they're trying to recover from a downward trend, because we want to be looking for those short-term trends to turn back up again, which they haven't done again just yet. So let's just see where this market ends on the day, as well as on the week. Cardano is one of those alts that's holding up considerably better than Bitcoin and Ethereum. The reason for this is it's holding up above the 12th of May low, whereas other markets that have broken down are in a technically weaker position. As we've seen in Galta, when the market does bounce, it bounces much harder. Link is another market that was holding up better, and I'm going to be getting to both Gather and Link soon. Solana continues to be hammered, closing on its prior macro support level around the 20,000 price range, which I'll also be watching out for when the next bounce comes in. Any recovery on Solana in those previous lows, I'd still be wary, believing it's more of a bear market correction before the overall downturn resumes. The next sign of strength for Sol would obviously be getting back above the same support level and getting something like a higher low and starting to see these shorter term trends turn back up, gathering one of those alts that has been able to put into 2 consecutive days of gain since bouncing off the recent low on June 13th. There is still a lot of work to be done, but it's approximately 30% from low to high, which is insane when you consider it. It simply goes to show how badly this market has been battered, but as long as it remains above its May 12th low, I'm still hopeful that this will be one of the stronger alts out of the gate if support holds. However, until then, traders will continue to take all profits from virtually every market seeking for any pump to short. Until that pattern ends, it'll be a matter of waiting for some longer-term accumulation and better breakouts above some previous support levels. Link is another one that's been able to put in some decent gains, especially when compared to the rest of the crypto space. It's put in a bit of a double bottom to its 12th of May low false break bounce. Its volume picked up, indicating buyers were stepping into the market. Shorts covering is clearly buying, which is why we've seen a nice bounce for Link, which is currently holding above its prior breakaway zone, which is another minor hint of its bullishness. If we can start to see some short-term trends turn up, I believe Link will be a market leader if and when a bounce occurs, particularly if it remains above its May 12th low. The market is still down, and I don't want anyone to be attempting to catch a falling knife. You must always have a plan and manage your risk correctly. We can see in the overall market capitalization that we are still on the way to a sluggish recovery, and I hope everyone was properly prepared for the market fall. Because we are in that sluggish recovery period, whatever short-term pumps we see will most likely be temporary until the market finds its next level of balance. This may be a risky call, but I don't believe we're already headed for a recovery. I'm not concerned with any wicks below the last macro support level that we've seen in the market. But as always, let's take it one step at a time. This concludes today's video. If you found it at all helpful, do give it a like and do subscribe to the channel for more content on crypto and research that can help you formulate a plan for the upcoming changes in the market. Good luck out there!